right, for today's video, we're going to talk about how an LLC is taxed. Or what many people don't understand is that many times an LLC is actually not taxed. Now, when you set up a business and set up an entity, you could be a sole proprietor or a partner where many people are owners of the LLC. So we're going to quickly go over what that means and how you're going to be taxed. Let's start by saying you're a sole proprietor, you're a business owner. Well, from that standpoint, the LLC, it's actually disregarded as an entity for tax purposes. It's only there for limited liability purposes. What does that mean? So if you're a sole proprietor, as you generate income and profits, your profits and income are actually going to pass through the LLC and go on your 1040 personal tax return under Schedule C. So the entity, it's as if it doesn't exist. Now, if you're a partner, there's an additional step involved. So let's say you have 3 people that are involved in the partnership. Once again, you have an LLC to set up and establish the business. Well, it's still going to be a pass-through entity, meaning that there's no additional taxes that you're going to be paying at the LLC level. There is one additional step where you're going to have to file what's called a partnership tax return. That's a 1065. So, as you generate income and expenses, depreciation, whatever's going on in the business, you're now going to have to file a 1065 partnership tax return. It's actually due March 15th, not April 15th like your personal return. After you submit your partnership tax return, each partner, partner 1, 2, and 3, is going to receive a K1. That is just going to give you your percentage of the revenue for the business. If you make $100 and you each own 33%, you're each going to get a K1 that says you have income to report on your personal tax return of $33. So it's a pass-through, no taxes up here, just an additional tax return. Now, where things get really complicated is you have one more option, really 2 more options on how this LLC can be taxed. If you're a sole proprietor, it passes through to your personal tax return. If you're a partnership, it passes through to the partnership tax return, and then you each get your share of the profits or losses. Or, if you elect to, you can decide to be taxed as a corporation, either a C corporation or an S corporation. Each of these different elections have their own benefits that could save you a tremendous amount of money on your taxes. But they're also very strict and have very unique rules and regulations, not only from a federal standpoint, but from a state standpoint, that could end up costing you a lot more in taxes. So if you have questions on when this could benefit you, go to the link down below and schedule a complimentary strategy session where we're happy to take your call and talk through what may benefit your business.